where your money actually goes when you save it in a bank, or how billion peso companies get enough funds to expand, or how the government still operates even when it's in debt. Welcome back to Project Accounting. Today we're diving into the world of financial institutions, how they work, who they serve, and why understanding them can change how you see your money. Let's start with the basics. What exactly is a financial institution? In simple terms, it is an organization that connects people who have extra money, the savers, with those who need the money, the borrowers. They take in your savings, pay you a bit of interest, and lend it out to someone else or invest it. That's how the economy keeps turning. Think of them as the power banks of the financial world. They store financial energy, then release it where it's needed most. Bangko Sentral ng Pilipinas, BSP, regulates most financial institutions to ensure safety, liquidity, and integrity. Now, let's talk about the major players in this game: individuals, businesses, and the government. Individuals are net suppliers. They put in more than they borrow. OFWs are the major fund suppliers via remittances. Businesses are net demanders. They borrow to grow and operate. SMEs borrow more than they save. And surprise, surprise, governments also net demanders. Because, well, have you seen the national budget lately? They issue bonds when budget is in deficit. Now, here's the fun part: the lineup of major financial institutions. Think of this as your financial menu. Each item has its own flavor and purpose. Let's break it down. Commercial banks, they are your go-to for deposits, withdrawals, loans, and sometimes free calendars. Examples are BDO, BPI, and Metrobank. Investment banks, they help big firms raise money by issuing stocks or bonds. They don't really take your deposits. They help corporations grow. For examples are PNB Capital and First Metro Investment Corporation. So, quick pop quiz. Which one holds your savings account? Commercial banks or investment banks? Commercial banks are where you open your savings account, take out a loan, or cash your sweldo. Meanwhile, investment banks don't deal with everyday people. They help companies issue IPOs and raise big time capital. Now let's level up. Universal banks are like commercial banks with a superpower. Aside from the usual savings and loans, they can also do what investment banks do, like underwriting, trading government securities, or handling trust funds. They are the Swiss Army knife of the Philippine banking, and they dominate the financial landscape. Examples are BDO Unibank, Metrobank, and Land Bank of the Philippines. So when a company owns a bank, insurance firm, stock brokerage, and leasing company, that's a financial conglomerate. Think of it as the Jollibee of the finance world, one-stop shop. Examples are BDO under SM Group and BPI under Ayala Group. Rural banks are banks that you'll find in the provinces. They serve farmers, micro entrepreneurs, and rural communities. They offer loans with terms friendly to people in agriculture and small towns. Examples are Cantilian Bank and One Network Bank. Credit cooperatives. These are member-based and community-focused. They offer loans for tricycles, tuition, house repairs with better terms than loan sharks. Examples are Card MRI and Sacred Heart Co-op. Then, microfinance institutions. These are all about financial inclusion, helping the unbanked. They offer very small loans for as low as 5,000 pesos and financial education to sari-sari store owners, market vendors, and small business owners. For example, ASA Philippines, Taytay sa Kauswagan, and Card SME Bank. Pawnshops. Short on cash? No problem. Pawnshops give you instant loans if you bring in jewelry, gadgets, or watches. It is fast and convenient, but don't forget to redeem your item or say goodbye to it. Examples are Cebuana Luwilier and Palawan Pawnshop. Pension funds. They take a slice of your monthly sweldo today and promise to give it back with interest when you retire. Examples are SSS, GSIS, and Pag-ibig Fund. Life insurance companies. So you pay your premium now and they pay your family when something bad happens or give you cash when you retire. They are part protector and part investor. Examples are Sun Life, ProLife, AXA, and Manulife. Then mutual funds and UITFs. You and thousands of others pool your money and expert fund managers invest it in stocks or bonds. Examples are Sun Life Prosperity Fund, ALFM, BDO UITF. Different funds are designed to meet the objectives of different types of savers. Hence, there are bond funds for those who prefer safety stock funds for savers who are willing to accept significant risk in the hope of higher returns, and money market funds that are used as interest bearing checking accounts. Actively managed funds try to outperform the overall markets, whereas indexed funds are designed to simply replicate the performance of a specific market index. So, for example, the portfolio manager of an actively managed stock fund uses his or her expertise to select what he or she thinks will be the best performing stocks over a given time period. By contrast, an index fund that tracks the PSE index will simply hold the basket of stocks that comprise the PSE. Both types of fund provide investors with valuable diversification, but actively managed funds typically have much higher fees, in large part because of the extra costs involved in trying to select stocks that will hopefully outperform the market. Then we have exchange traded funds or ETFs. These are mutual funds but tradable like stocks, low cost, low effort, and great for beginners. Example is the First Metro Philippine Equity ETF. Then there is hedge fund. Super high risk for super rich investors. They try to hedge or protect against market swings, but they are mostly out of reach for regular folks. Then, lastly, is the private equity firms. They don't just invest, they buy entire companies, improve them, then sell it at a profit. Think business rehab with a fat wallet. Examples are Navigar, ICCP's SBI Ventures. So, whether you're saving for a dream house, building your retirement fund, or just trying to understand how money flows in the system, knowing your financial institutions is essential. Like if you learned something new today, subscribe for more easy to understand business and finance videos, and comment below which financial institution do you trust the most and why. Let's talk about it. This is Project Accounting reminding you understanding the flow of funds via these institutions is the key to make smarter financial career and investment decisions regardless of income, level, or profession. See you in the next video.